Hello, everybody. We're here with our weekly. The thumbnail should have spoiled the vast majority of what I'm talking about, but I got more to talk about because there's a lot more nonsense happening under the hood of cryptocurrency, and I want to take some time to talk about my thoughts on what's happening. I am not necessarily concerned, but I do think that there's an opportunity here. If nothing else, there's an opportunity here to rethink exactly what's going on. Like in the big picture of it all, what's truly going on. I want to start first with our everybody's favorite, at least it should be anyway, everybody's favorite with Ethereum, of course. Ethereum is wavering again. Still, I'm on record for those that are new listening to the YouTube side. I'm on record of saying if Ethereum goes beneath 900, I will do live karaoke on the YouTube channel. That's how confident I am that Ethereum just has a robustness that I don't believe is going to lend itself to a complete crash. So let's see if I'm proven wrong. So far, it seems like Ethereum has stabilized ever slightly. That said, it is in a downward trend still, but some of the bleed that we saw has kind of tapered off. We saw pretty steep drops as it was getting close to the proof of stake transition off the merge. Once that all wrapped up, we saw some stabilization. The current theory right now is that once we get rid of all the mining people that were holding bags and they basically just dumped off and rushed to whatever other garbage project, once we get rid of all of them, that Ethereum is going to recover and get back to a level of stability and possibly a strong run. I do think, though, that some of what holds Ethereum back at this point is, of course, your Gary Genslers of the world, who I believe intentionally so come out and say a thing designed to kill the business. I do believe there's some of this. I believe that the SEC coming out saying that now that you're proof of stake, we control all your transactions, plays a little bit of factor into it. We know that Bitcoin plays a factor into it. Bitcoin was having some trouble. Bitcoin continues to struggle and waver around its bottom resistance line. And there's a theory that if it goes any lower, it's going to start dipping down into lows that we've not seen in a long time. Now, just to put in perspective, though, we are still up over the year. So that's good. We're still reasonably up. However, it doesn't seem like Bitcoin is able to get past this resistance down. There's theories floating around about what it is. I'm not going to bore you because I don't think it matters at this point. However, Bitcoin is still going to be a disruptor in where we go in price movement and price sentiment and everything else in the long term. We don't know where it's going to go. And so for now, my feedback to everybody here is be thinking about what a diversity, a portfolio, what else makes sense to create more diversity in your portfolio if you haven't done already. Because if your portfolio has largely hinged off of Bitcoin, fine, it's just you know that your volatility is sky high. So if you're trying to minimize volatility, you really should have a diverse portfolio of a bunch of different assets all at play helping to offset the other. For example, if I know that Bitcoin is dropping thousands of dollars, then maybe I have these other 10 that are going up ever slightly to help offset the losses over here, at least in the short term. We don't know what's going to happen in the long term. And I know you've heard me say that multiple times. It's true. Nobody, I'm stressing this, nobody really knows what's going to happen in the long term. We all have a confidence and a faith and a belief that it can only go up from here because it's gone so far low. We can only go up. And we've seen this before. We've seen this type of disruption where things have appeared to crap and crash and burn. And then all of a sudden things start going up again. That may happen again here. Time will have to tell. Patience is going to be your virtue. I was on KuCoin and I was looking at their community and some of the responses people, and this ties to Luna Classic in a way. So for KuCoin, and apparently it's on the mobile only, which is stupid, but there's a community little widget. And in the community, there are people that are commenting about which token under coin info. The responses from these people, they explain a lot. They tell me that these people just don't get it. They don't understand. And so for them, it makes all the freaking sense in the world. Yeah, this is whatever it is. And the truth is, it's like, wait a minute. What the heck are you doing? Why are you responding like this? Why do you think what you think? What's really going on here? And then big picture, right? When I look at what's they're talking about, they're saying things like, okay, jump to this one because it's pumping now. Jump to this one because it's pumping now. Jump to this one because it's pumping now. They don't seem to care about stability and diversity and making sure your portfolio is as robust as possible. It seems like for them, it's just find the next thing that's pumping and go off that. If that's the strategy, and those listening to me, if that's your strategy, I celebrate you. I respect you. If you want to be a gambler, great. I am not. I will not. I refuse. I will never advocate it. And this comes from time, right? I've been in it so long. I've been there where I've been tempted to just jump to project to project to project, seem to be pumping. You're just whack-a-mole. Sometimes you win it, sometimes you don't. That's a gambler by definition. I'm not going to be a gambler. I said, let me find ones that are going to be stable, and I just have to trust the process and kind of find the ones that are not failing because of incompetence of the devs if I can. That's why I haven't invested in Solana to an excessive degree, because I see their devs are incompetent. That's why I haven't gone all in on Cardano, despite being bullish about the token, because I've been told repeatedly that the leader's an idiot. Okay, well, I have to try to find these ones where I don't get that kind of feedback. And I've settled on my Fave 5, and my Fave 5's even changed. I've had to adjust it because certain ones aren't performing, possibly due to no fault of their own. Point is, they're not performing, and I need ones that perform. So here I am. I've got the projects that look like they're a decent blend of a thing, Luna Classic being one of them, but I realize that all of them essentially are going to be long-term. They're all going to be ones where I literally just have to ignore the wallet for the most part, unless it's a dramatic drop off, like SHIB did. Other than that, I just kind of have to ignore it and identify new projects as I go, re-diversify, possibly DCA, so possibly buy in off dips if I see that it makes sense. Like with Luna Classic, I stopped buying dips on Luna Classic because while I could do it, it would increase my investment to a degree that I'm not comfortable with from a risk management perspective. I said, no, I'm not going to go all in on this business. I would rather just kind of take it over and just watch what I have, because what I have should make good money. I'm good enough. Am I leaving money on the table? Probably. And that's just how I am. So like if I looked at Cardano peaked at roughly $3 and something a rod. And so that's down to about 50 cents and been wavering there even despite the Vassal upgrade. Well, again, I've been bullish for no dang reason on Cardano, but I refuse to give more money because I'm told the leader's an idiot, but it's one where I get tempted. As part of a diverse portfolio, I get tempted and I have to fight the temptation of just buying because I don't want it to, trash me in the future. The other one that I do on Coinbase just because of rewards is XLM. And I've always liked XLM. I'm just not bullish on it necessarily, but I've always liked it for the rewards off the card. I think it's fantastic. I used that very recently to my distinct advantage. It's not one of those that I hold. It's one of those that I transact. Now that gives me a new perspective. Maybe transaction was always the key. Maybe I just simply need to stop focusing on, and this goes to a point I'm going to make later. Maybe I just need to stop with the hold strategy for certain ones that don't make sense to hold them. Certain ones, that's the best thing you can do, right? Everrise in the NFT staking, to me, makes perfect sense to just hold them as opposed to doing these other ones where it's like, okay, am I holding it just because somebody told me to, or am I holding it because there's a reason to, or why am I holding this, and what's compelling me to do a hold? Why do I think that makes any sense? And rethink it from scratch. As then I identify, all right, transaction is probably the best answer. I then rebalance my token platform, my projects, my wallet, to rethink what needs to be there, what needs to stay there, and then what needs to go, and just transact it and not worry about it. And be okay with that. Be okay with the idea that I'm not going to make significant wealth in the short term because of factors outside of my control. I also have believed that November, people are waiting for a potential blowout in November. I think that's playing a factor as well. I can't say for sure, but I do believe that also may be playing a factor. Who knows? If it's true that people are waiting for the blowout in November, I am intrigued personally what that means. As in, do we see a significant jump post-November? Some people felt like October, November, December is going to be more run. Depends. Does Gary Gensler come out, say some garbage again and kills the business? Probably. Does Joe Biden come out, say stuff that kills the business? Probably. All of that's going to play into factor. I think it's strategic. I think they're doing it on purpose. I think that they're intentionally doing this stuff. So then the issuance of Ethereum, quick note here, we saw that Ethereum was just having an issue, having problems. It was having problems with getting Ethereum out into people. We were not seeing more Ethereum go out. For those that didn't know, Ethereum implemented a burn as part of this. And so Ethereum will become deflationary. However, the problem is there's a lot of Ethereum floating out in the wild. And so despite the fact that this burn was implemented, you still have kind of this, not inflationary, but it's kind of in this middle tier where it should be burning excess, but it cannot because the excess is still floating out there. The sell from the miners should have helped some of this. The problem with it is that some of that sell-off happened prior to the actual burn having an effect. Like many of them were not subject to excessive amounts of the burn. Now it's kind of this waiting game, which is exciting to me. And if you've heard me for any period of time, you've heard me say stick with the core tokens. I don't think they can steer you wrong. The theory is that over time, this deflationary, as in the burn, deflationary approach is going to skyrocket the price of ETH in the long term. In the short term, we're going to have to wait because there's basically excess supply floating around. We have too much supply out there, which is depressing the value of it. Well, if that's true, that means that it's not necessarily that people aren't bullish on Ethereum. It simply means that time has to pass in order for us to see that. We have to get to the point where we get rid of some of the excess supply that's out there. If true, and I'm not making a statement of confidence, I'm saying if true, that means that Ethereum is going to prove me right in the big picture, which is yes, it will get to possibly that 5-figure mark that people have been estimating for a long time. Because if it starts to burn and burn and burn and burn, and mind you, there's other, layer 1 tokens and such that have constrained supplies. They don't have the same volume. They don't have the same number of holders out there. They don't have the same traffic that Ethereum has had. So that's going to open up doors, I believe, for positive price sentiment. And then we have to see how that affects Bitcoin, because if Ethereum, because right now Ethereum still depends on Bitcoin to some degree in terms of price movement and parity of price movement. If Ethereum is able to surpass, in terms of, I'm talking performance, not necessarily price, performance, surpass Bitcoin in terms of strength of performance, that's huge. It's also concerning, given the SEC statement, as you see off over here, that if it's on Ethereum, we own the do. And I got a note here later about the idiot Vitalik, but some concerns around Ethereum have been that when you move to proof of stake, you are moving away from decentralization because, of course, proof of stake depends on staked assets. Staked assets create centralization, which is not decentralized by its very nature. It's not like a miner can go and mine blocks and get their own direct from So it is a different world. It is a concerning world. And we have to see long term if what they're saying is true, that this proof of stake is the opposite of what crypto was intended to be. It was always intended to be decentralized, and now you're centralizing it, going to proof of stake. Well, there are other tokens out there that remain proof of work. Of course, Bitcoin is one of them. Ethereum Classic is one of them. The ETH POW is another one of them. But you may not have realized that Dogecoin is also proof of work, as well as Zcash. Idiot Vitalik off the Ethereum said, they need to move to proof of stake as well. I am making a statement, and this will be a statement, a firm statement. I believe, tinfoil me all you care, I believe Idiot Vitalik is in cahoots with government. I believe that somebody has influenced him, and they're using him as a talk piece, just like Greta Thunberg on the climate side. I believe they're using him as a talk piece to influence, there's that word again, people into getting away from decentralization. I believe that people are convincing him to be that voice to advocate for proof of stake all across the board, not because of the climate, not because of the good, not because of any of this, but simply because I believe there are factors above him that are using him essentially as a puppet. Use his voice, tell people you need to get off this proof of work because it's the right answer, trying to use his influence, essentially. I believe this. I firmly believe it because there was a time this guy would never even have given Doge the time of day. Never given a time of day. Didn't care about it. Trashed dog coins to the nth degree. He made statements even that said, proof of work is what it is, and this is what it is, and we want to decrease the energy use of it, but we still want to maintain this. And then he shifted gears. He completely shifted gears, and all of a sudden, he got on board with this notion about the climate, and I believe, I firmly believe, somebody is using him as the puppets on the string. Somebody is using him as the voice. Somebody is saying, okay, here's what this is, and we should push this way, and everything goes that way, Now, Elon Musk, who's on the board for Doge and has been a supporter of Doge pretty much primarily, has frequently said that he feels that the energy used for Doge could be decreased and that there could be more efficient ways to do Doge. As far as I've seen, and there may be some article, and if you have it, feel free to share it, but as far as I've seen, Elon has never come out and straight up supported a proof of stake specifically for Doge. He simply said there's more efficient ways to do what we're currently doing. As far as Zcash, I think Zcash is one that is likely to not change simply because at least in the past, is no, we want to keep it what it is, and we want to say what it is, and we want to be this over here, that different, that alternative. They may change their mind because of the influence of the sky. Hopefully not. Because think of this, if you only have proof of stake across the board, it means that you've lost every aspect of decentralization there ever can be. I'm not saying that proof of work is the right answer as currently built. I'm saying that if you move everybody to proof of stake, you are derailing the whole point of the thing. And I believe there should be a different answer that allows the decentralization to continue without the influence of the government. And I do think there's an argument and a case to be made around proof of stake and the government's influence on that. What that means, I don't know. I'm not at liberty to say. I am saying I do think there has to be some middle ground that doesn't involve centralized assets, because that's what you're talking about in proof of stake. You're centralizing assets on the back end. Meanwhile, most of the proof of work ones, if you say, let's say Bitcoin, leave it as it is and whatever it is, and then just let the market decide, as in popularity, volume, velocity, etc. Let the market decide. The problem with Bitcoin is that pretty much we still haven't mined all the blocks, but the difficulty is so high, we pretty much never are going to mine all the blocks. Okay, so then it's essentially centralized by virtue of the fact that what's in circulation is held by the big players. That's why I'm saying it's not about proof of work specifically. I am saying I don't support this idea that all of these other ones should just jump on proof of stake simply because Ethereum did it. I don't think that's the right answer. And I suspect someone up above this guy is using him as puppets on a string to be that voice to push all of them across the board. And I do believe that that's going to cause some problems from a legal perspective down the road, as of yet determined. I don't know what that means. I'm just telling you, this is what I foresee happening. If you're in the LIBERO/LIBERA ecosystem, I'm sorry. I'll just share up front. Might as well. I don't have any assets left in any of the banks. I went ahead and did the 90% because they didn't want to work jack anyway. It didn't matter. And at least that's some little bit that distributes to the existing community. It wasn't worth sitting on it because I already knew that they frankly didn't care. And that's part of what I'm going to show. So LIBERA, they've made some changes. Some people may not be aware they've made some changes, but they've made some changes. This is simply to talk about the changes. And before somebody, possibly from the eco, calls out FUD, these are not FUD. These are things you can verify yourself. I am simply sharing them so that people are aware about what's really going on with this. Just to level set where we're at. The LIBERA is all about the miners. They don't care about the banks at all. They don't really care about Liberator Bank. They don't care about LIBERO. They care about the miners. So when we say LIBERA today, it's not even about that token. It's about the miners, essentially. I'm going to talk about a couple different things here. I have highlighted here this is the liquidity price pair, $1.20. It launched about $1. It peaked at $2.70 some odd cents in DigiFinex. Has never got back to this. They claim that they burned 40% of circulating supply because it started with a 10 billion supply. They claim they burned roughly about 4.6. People may be curious, wondering, well, why is it then that, because really, if you're talking 40% circulated as burned and then 8% nuked, people may be wondering, well, why the heck isn't the price going up? And I want to explain a couple things. Burning by itself does not increase supply, or price rather, does not increase price. By itself, it does not increase price. It takes a number of different things to affect price. And one of those, the most critical, I would argue, is volume. Volume is what tells the system, here's the price something's being bought and sold for. When I showed DigiFinex, I showed that ultimately people are selling at a discount. They're buying at a discount rather. People are selling it lower than they should do because in their mind, it's like a pump and dump type thing. If you look here, This is DEX screener off BuySwap. BuySwap is the primary liquidity store. Notice it's basically pump and dump. That's what it is. Because if you look down here, it's hard to see, but the volume is low. The volume is extremely low. That's what's hurting the project right now, is the volume is low. In the last 24 hours, there's only $4,000. In the last 6 hours, $2,000. In the last hour, $13. The volume is too low for any positive price movement, and you probably have a lot of people sitting on supply willing to sell at low to get out of the price, get out of the supply, and try to recoup some of the money or make whatever little profit that 20 cents would have gotten them. That's what you're ultimately seeing with LIBERA. So given this, when I looked in the miner, the LIBERA one specifically, I noticed a couple things changing. Just to level set, the LIBERA miner, when it launched, they said it's going to be 1% of the total value locked. That's part of the prize pool. If you notice, the numbers are going down in the reward amount. This told me one thing. This started at $12,000. It was $12,000 reward, daily reward off the TVL. It then went down to 6, then went down to 3.5 or 3.8. Here's the catch though. This, for this specific record, used to be over $6,000, used to be $6,500. This is the actual value as it is right now. Now this whole thing, this whole business gets very interesting, because what it means is that they're not actually issuing a reward that is a static value reward. Because they're issuing it in the liquidity token, it means that as LIBERA craps, you're actually losing value. So you might have won, say, $6,500. That's only worth $6,000 right now. And I want people to understand what I'm describing here. Because if you were told that you won $6,500 and then it's only valued at $6,000, you're essentially not getting the true value of a thing. You're not getting the value that you're supposed to be getting. You're not getting the value you were told you were getting. You're getting the value as of a snapshot in time, but that's not perfect. So as time goes by and they do these rolling deals off, your fund, and they say, here's how much you've accumulated, that means your accumulated amount is going down because it's based off the liquidity token, not just the stable coin. LIBERA itself is still crapping. So you're actually losing money by being in the miner, because remember, anything that goes in the miner is locked. You can never get it out, and it's constantly losing value. They pay you right off the mine, but that's only once a week that you get it. And you get nailed with a fee when you do that. So I would be interested to hear somebody come back with some numbers off theirs, because I'm not in this to that degree. Numbers off theirs, actually run the numbers. Somebody that won this, the deposit prize, I'd be interested. If you won this, what was the number they told you won at the time? What is your accumulated after you won it? So you should have a number of whatever, 7,000, 8,000, 10,000, whatever. And what is it now? How much did you lose basically between then and now? And then off your rewards every week when it claims to your wallet. How much are you losing from what its value would have been back when you won that deposit versus now? Because there's a decrease in value. So that's a loss, impermanent loss. Then there's the fee, which if you use the automation is 5%. If you don't, it's 20%. Like, I'd love somebody that won this prize to give some real numbers about if you lost, let's say, because in this case, it's like $500 lost off that, 5% fee over here. Let's say somebody lost $600 off of a $6,000 prize. That means you're taking a 10% hit on that. I'd love to have somebody crunch those numbers and provide that as a response, because I'm curious now, because that means that the largest ones, the whales that went in early when it was $12,000, they got hit a lot. They lost a lot, because just losing $600 off this, that's 10%. So somebody loses over $1,000 after they had to put in like $6,000 to get in. And then there's 6,000 that they put in, lost the same 10%. So you put in 6,000, it zaps in as a liquidity pair. So it loses 10%. You get a reward of 6,000, let's say $12,000 when it was early. It loses 10%. You just lost $1,800 because they did it as a liquidity because they're trying to give liquidity, not stable. But why does that make any sense as opposed to just doing stable? Because they knew that the liquidity is what's at risk. Well, then contrast this. I took a look at the thorium one because it's a BNB miner, not a stable miner. It's paired with BNB. The thorium liquidity pair is $22. Thorium's market cap is half what Libera's is. Okay, that's unique. So thorium's is actually more valuable because it's paired to BNB, not the stable coin. So think of it this way. On the Libera side, you're basically getting a 20% premium over the stable coin. Your Libera is essentially worth 20 cents because the pair is $1.20. Binance USD can only ever be $1. So that means it's $1.22. That means your Libera is worth 22 cents. That's what that means. That's what that means. That means that what they're quoting in this business, you're constantly losing money because Libera is actually way lower than the dollar. The liquidity pair is $1, but it shouldn't be because Binance USD is part of the pair. Binance USD is a stable coin. It's already at $1. That means that your Libera is essentially valued at 20 or 22 cents. So you're losing a lot of money with at least on the Libera side, when you look at the numbers, because this here, and I want to just make sure you understand what that's saying. When I looked at the thorium and I did a contrast, that means if the total price of the pair, so this is two tokens, if the total price of the pair is $1.20, and you know Binance USD is $1, that means that Libera is 20 cents value as part of the pair. It launched at $1. Libera by itself launched at $1. How can it be possible then that Libera price is $1.31 when in the liquidity pair it's lower? Something's not clicking. And I believe it's because this price, although that's what it's trading at, that's not its value. Its value is actually really about 20 cents because Binance USD is a hard dollar. Whereas on thorium, because it's paired with BNB, of course, is right now it's like 200 and some odd dollars. So that means thorium is 10% of what that is. Thorium price 45 cents. Okay, that makes better sense to me. Thorium's numbers make sense to me. Thorium's numbers add up to me in what I would expect the liquidity pool to look like. And I suspect it has something to do with the fact that it's paired to BNB as opposed to Binance USD. That's my theory. So if Libera had been paired to BNB, I'd be curious if it would have had better price movement. I'm talking better, not stable. I'm talking better as in, because look at thorium. Thorium immediately doubled, near doubled, the moment they launched that business, V3. And with its pairing, its value of the pair is significantly higher. Yet it has less money in the market cap. How can you explain that? Other than this seemed like it was a smarter pairing, was to BNB, as opposed to Binance USD. Very interesting, right? Also, consider on the thorium side, now, if I go to its miner, which is a BNB miner, not a BUSD miner, but on the BNB miner, look at the rewards. The rewards are way smaller, way more manageable, so it's not literally draining the fund like crazy. It has way less people buying in, so there's only 1,000 versus Libera's 4,000, so there's less people buying off the pool, but it has more money that's flowing. It has more money that's going and being claimed and everything else. It also has multiple different prizes, multiple different ways to actually get value out of the thing. Largest depositor is the equivalent of the Libera, but then Libera does not have the Win It Now one, which I frankly think is a ripoff. But the point is, this one has more types of ways to win off the pool. It appears to have a more trustworthy liquidity price, in my opinion, which appears to be, because it's paired to Binance BNB rather than Binance USD, despite having a lower market cap, and appears to have stronger upward potential over time, versus Libera, which appears to be pump and dump in its current, and the price nothing really makes any sense. In the price compare, this doesn't make any sense. I don't know what that specifically means other than possibly, this is a theory, if somehow the fact that this is wrapped LIBERO, that this price that they're showing here is misleading, because that means that basically they should be calculating off this price as wrapped off that index. If that's true, that means my theory is correct. LIBERA is essentially only worth 20 cents because of how much LIBERO it would take to wrap it to get to one LIBERA at LIBERO's current price would get you roughly close to the 20 cents, meaning the true value of LIBERA is actually way lower. You can't realize that value because it's always either the single token being traded high, meaning you can only buy it high, or in the liquidity pair where it's valued low. Like you can't control it to say, well, I'd like to buy LIBERA at only 20 cents and then sell it for $1.30. That would get you recouped your, because if you get the liquidity pair, whether you buy it or you zap it, if you try to unzap, it's going to do it at the current price that they're quoting, which means you're never going to be able to, you can't cheat it in arbitrage and get that difference in price. Okay, that means that LIBERA's miner is significantly losing value over time. It means that it's not giving you any increase in value. It's actually going down, which would explain why the reward numbers are decreasing over time, because the value of LIBERA is decreasing over time. That means the total value locked is decreasing over time. Total value locked is the liquidity pair. Liquidity pair has the LIBERA token, which is crapping in value. And anybody who's winning off the LIBERA side is significantly losing value because of the fact it's paired to the wrapped LIBERA, which is paired to a crapped LIBERO. Whereas on the thorium side, it's only the thorium token. The thorium token's not wrapped to anything in of itself. It has its own value. Thus, it's able to maintain its value stronger than what LIBERA can do because it's not wrapped against a losing token. Thus, it has more strong potential for positive price movement despite having sell pressure. And it does have sell pressure. And notice, way less volume does thorium have than LIBERA, and yet it's able to sustain positive price movement. What am I saying? I'm saying that LIBERA, this whole business was caused because they wrapped LIBERO to create LIBERA. And then they refused to fix LIBERO. So basically they're linked. As this one keeps failing, and it does, it's just hurting the price of this one. Well, if it hurts the price of this one, that's going to hurt the price of the liquidity pair. Because the liquidity pair is what the miner's looking at, that means that you're mining, whether profits or the win, the whatever, are all decreasing. So you might have won something that was valued at something at a point, and then you've lost that value. You're still losing money. Even if you don't go directly to LIBERO, you're still losing money. Even if you win this, you're still losing money. The money you deposit is losing money. Everything in the LIBERA miner is losing money. It's actually losing value because it's all tied back to LIBERO. And LIBERO is crapping and they don't want to fix it. This, ladies and gentlemen, concerns me greatly after I saw that on the thorium side, because what it means is that no matter what, this one is a sink. It's literally a sink that's just draining money out of you, likely offsetting whatever money you would have made once a week, with the only exception being if you were an extreme whale to be able to offset it. But even then, you deposit $15,000 to get $70,000 in deposit, but that's deposit of value that's decreasing over time. So as of 2 months ago, this compounded deposit might have been $80,000, and that person's lost significant amounts of money. They don't realize it because they're not running the numbers like I am. I'm shocked. So I said earlier on, I had a little bit more confidence in thorium simply because it's not wrapped to a crapping token, and this seems to support that argument that thorium, at least, its miner is based on more reliable assets, if nothing else, which is why they're able to give more in its than the LIBERA side can. But again, it's like the banks, right? Anybody who went in on LIBERA miner because it came first is stuck. You can't get that money out. It'll still pay you once a week, but you might have dumped $2,000 in the thing in good faith. They spin up this one that's 10 times the value. Now, what about these people over here that are stuck over in the LIBERA minor? Same thing as with LIBERO Bank. They spin up LIBERA Bank. Okay, what about people stuck in LIBERO Bank? You're just screwed. They spin up Liberator Bank. Okay, what about people stuck in LIBERA Bank? You're just screwed. Then they spin up the minor. Okay, what about people stuck in any of the banks? You're just screwed. Another shiny that in this case happens to be superior to the shiny that was before it, all because this team doesn't really have a strategy to take care of the investors. They're just responding to a thing. And then on the thorium side, thorium is like their last, in my opinion, last wall. They don't really have anywhere else to go. Thorium is like the last tier of the tokens. If thorium, for whatever reason, doesn't work, they're screwed. But for whatever reason, the thorium, it seems like a stronger overall, how they did it. It seems like it's more strong and more robust. I assume that's off of farming profits, but I'm not sure. I don't know where exactly they're making the thorium part work, because thorium has never had significant amounts of assets underneath it. My only best theory is them pairing to BNB somehow gave them more robustness than pairing to Binance USD. That's a theory. I have no evidence of anything. Please don't quote me on a thing, but that's what it is. So yeah, cool. So I'm going to wrap up here very soon. This will be a very quick episode. I want to quick talk about Stockholm Syndrome. And let me reuse one of these. And I'm just going to go to, let's see if I have it open. Probably not. I'm going to go to, not this, not that. I'm going to go to my own YouTube channel, because I did a video and it's getting quite a bit of hits. I'm not going to play it, but I want to talk about Stockholm Syndrome because it's something that is bothering me in cryptocurrency. For those that don't know what Stockholm Syndrome is the idea that your captor, your kidnapper, or your harasser, or your sexual abuser, or verbal abuser, or emotional abuser, somebody that is doing something that is harmful to you, you gain affection for them, despite the fact that they're doing this. I'm starting to see this increasingly in cryptocurrency. I certainly saw it in Seifu, but as I thought about it, it's not just Seifu. I saw it in Saitama, because Saitama, with the failed November 13th Vegas event, lied to investors and repeatedly lied to investors and continually failed investors. And at no point did that cult leader acknowledge this Russ we trust, stop it, it's not about them, it's not about me, it's about the project, let's get back to reality. They didn't stop the toxicity. They didn't do anything to cultivate a healthy community. So it's essentially a form of abuse. And then there was people yelling back and forth, the Faltrons of the world yelling back and forth, all because of team failures. It's failures. So Saitama did it, saw that. Floki had 2 rug pulls. They essentially did it. Seifu's done it. LIBERO has certainly done it, because LIBERO has just spit up another shiny and ignored the voice of the investors, ignored people telling them to talk to Leicester. Fine. All of them are essentially doing it. Cult DAO's doing it, because Cult DAO has got people convinced that it's something when it's crap, right? All of them are doing the same thing. Dogechain launches. Somehow, through some magic and mystery, they get listed on pretty much every exchange day one at initial unreasonable pumps, despite having nothing to show for it right now. ApeCoin, crap, absolute garbage. And for whatever reason, it's able to just do this stuff. And then it creates this unrealistic hype, hopium, underneath the token. And if you've invested in certain projects, they'll just say, I just hold. Don't worry about the hold, just hold. SafeMoon, same thing. Hold, just hold. And they convince people. It's hopium. They convince them, we're going to be okay. We're going to get somewhere. I got to throw Dozezilla in there too. We'll be all right. We'll be all right. It's all cool. And then people start ingratiating. It's like, okay, this leader, he's taking care of me. She's taking care of me. We'll be okay. A Cliff on Shinja and all these other garbage ones that they get the community to just support them despite it being crap. Like, it's literally crap. And people can't disconnect from it being crap. When I say that it's Stockholm Syndrome and I can see it, I don't care if people want to be gamblers. I've said it. I celebrate anybody who wants to be a gambler. All I ever ask is people just admit it. We're gamblers. We're gambling. David Gokhshtein came out. He's an influencer. He comes out and he says, I don't know why people are on Luda Classic. It's a lottery. Doop. All crypto not named Bitcoin and Ethereum is essentially a lottery. They all are. They all are lottery tickets. The key is, How confident are you that your lottery ticket's going to pay you? I don't go after just projects because they're green. No, it's got to do something for me, like Everrise. It's got to do something. It's got to convince me it's acting like a business. So I'm confident leaving them my money for the long term because I know it's a long-term play. I'm not beholden to them. If I see Everrise screw up, I'll take my money out. That's why I said I got to rethink my Fave 5, because there are projects that I was cool with, and then they don't perform, I take my money out of them. LIBERO. I was cool with LIBERO at a point. It was doing what they told me. Today, yes, it kind of sort of gives you money, but it's nowhere near what it was. So I took my money out of the banks. There's no reason to leave my money with incompetent devs. It seems like just in crypto, I was talking about the KuCoin in the community. Across cryptocurrency, there's just this, you know what? This one's not performing right now. So let's go over here and do this one over here because it's pumping green. And then it's some dev over here that says, yeah, just hold. We'll be good. Just hold. And they get in that narrative and they get stuck in there. In the Seifu video then, and this is common crypto, you'll hear stories that say, you know what? I should have gotten out when it was $20. This one pumped to $300 something. If you're staying in a project beyond hundreds of dollars where you could have had thousands of dollars of value, I'm sorry, that's Stockholm Syndrome, because it means that that dev was wrecking you and you're not either not wise enough, smart enough, brave enough, whatever, to just sell, like get out. Don't stay in it. Don't be loyal to any of them. None of them are your friend. This Luna Classic then. Binance refuses to implement the burn up front. They later came back and said, you know what, we'll make it an optional flag. You can choose if you want to opt in to the burn, but we're not going to pose it on everybody. Despite the fact that CZ Binance himself on social media said, yep, well, so they should burn. Burn's the best way to do it. And then doesn't want to do it off chain. Now it's an opt-in. Well, nobody would opt in that has any common sense. So it means you're back in the same thing. I'm telling people, this is why you don't do this hero worship following all these devs, because they're not your friend. They're all profit driven just like you are, right? This is common sense though. So my summary for anybody listening now or after the fact, Stockholm Syndrome is a dangerous thing. You should not have any hero worship to any one of these devs. They're not your friend. They don't support you. They don't care about you. Even the ones that are good projects, they don't care about you. They care about the project. No problem. We want to see they act like a business. That's all that really should matter. As long as they act like a business and they're functioning like a business and they're smart and they make good decisions in support of the community, not against it. If they're just going rogue and doing whatever the F they want to do, like Cliff on Shinja and cult leader Satama and car salesman on Seifu and car salesman 2 on LockPay and all these other ones that just go and then they say FUD when you say something is going to be a risk and they freak out. Or like Para Token, that's now Para Works or whatever garbage. That just keeps screwing up, and they've done 4 different migrations. If they keep screwing up, speak with your wallet. If you stay there, you can't complain when you lose crap tons of cash because you chose that. That's Stockholm Syndrome. And I want people to recognize when they're getting in that groove. And I'm saying that because I've been there. I know the feeling. I know the feeling from SHIB. I was that in SHIB. You know what? I'm just going to stick with this. I think it's going to be something someday. No. If they screw up, they screw up. It is what it is. You can take your money and go somewhere else and sell when it doesn't make sense to stick it out because they're not performing to your satisfaction. If they're performing to your satisfaction, great. If you're a gambler, great. No problem. I'm not telling you what to do with your money. I'm saying recognize when it's really a Stockholm Syndrome. Recognize when your project is ultimately garbage and they're never going to be anything other than garbage, despite what they say. If they're not showing up, recognize when the feeling that you have is not real. It's fake. It's like this lady, this guy, they're not going to show up. They're not going to be a thing. I would argue the same should apply to any influencer on YouTube. If you're just following what the person says simply because you like them or because they're funny or because they're cute or because they have the ASMR voice, recognize when that's happening to you. It's a psychological thing. Recognize when you're being influenced to something contrary to smart logic. If somebody tells you to buy a thing just because, and they don't look at the white paper, they don't look at the site at all, they don't look at any fundamentals, they don't look at the code at all, and they straight tell you to just buy it and there's nothing fundamental around it, you should have red flags in your head. And ideally, you should want to know, were you enriched by that project to tell me to buy it? And are you going to dump off me? Chances are, if they've done it before, they'll do it again. There's a couple of names out there that you've probably heard before that have done that multiple times, and yet people still follow those influencers. It's up to you. I'm simply saying recognize when it's really a Stockholm Syndrome and somebody is abusing you and abusing your good faith. Because it's hard, right? You're listening to somebody that's popular or they're cute or whatever, and you get tempted to jump into a thing. I know the feeling. Some people, I don't do this, but some people, they just go off Kim Kardashian's half-ass naked photos and they'll just listen to whatever she says. Just recognize when that's happening to you. It's psychological. It's a trick. It's a tactic that they all do, and they know how. They know how it works. They know the game because that's why they're influencers. That's the word, influence. That's all I'm asking. Recognize when that's happening. Recognize when it's being done to you, and then recognize what you want to do about it, which is either nothing because you're cool with it or something because you're not cool with it. I'll wrap up this one with what I call the LUN challenge. And I'm excited about this one because I'm probably the only one that's going to do it. That's cool. I like that. I like that smoke. The LUN challenge is my own design. This video is timestamped. It's online. There's a tweet timestamp. So if anybody else swears they originated it, they're full of crap. I did. This is me. Here's how this is going to work. And again, if I'm the only one that does it, fine. I'm going to challenge you to think differently by the time I'm finished here. What I'm going to do going forward, starting with the October 2nd weekly that we do, which is the next weekly, that'll be the first time I do it because I want to get the notice out, give people a chance to think through what I'm talking about. How this works is, if you listen to YouTube influencers, right, you'll hear almost to a T consistently. They'll say, like, subscribe, hit the notifications button to get alerted, and, you know, whatever, because they're trying to grow their followers. They're trying to grow their stats. YouTube then influences people to those channels based on that. How many subscribers do you have? How many likes do you have? How many notifications? You hit the little bell. However many people do that, YouTube will then start steering. They'll say, okay, that must be popular. So let's push people over there. When they hit the algorithm, when you search for something, they'll steer you over that way. You don't realize it's happening. And if you don't believe me, here's how you can test that theory. Right now, if you do a search for Luna Classic in YouTube, I'm talking just go to youtube.com, do a search for Luna Classic. I guarantee you, the channels that you see are people that you viewed on a regular basis at the top. If you then open up a private window, so if you use Edge or Firefox, whatever, open up a private window off that browser and do the same search, you're going to see different people. Because as you navigate through different channels, it tracks which ones you're most likely to view. And then it steers you back to them. Even though there may be other people with a dissenting voice or a more logical voice or a more sensible voice, they don't steer you there because you haven't touched them before. Well, obviously. So I said, all right, I've never done. I don't ask for subscribers. I don't ask for follows. I don't ask for likes. I don't ask for notifications because I'm not a YouTuber. I'm a podcaster. The podcast is the main. The YouTube is an extension show. For me, this is not any source of profit. That's why there's no ads on mine, and there never will be. It's not profit for me. So I said, let me put my money where my mouth is on the podcast side. On the YouTube channel, Leicester Live that you're watching right now, this matrix that I got over here, what it means is I'm going to take the numbers from each of these categories, and I will take and equate that to $1 for those numbers. And I will burn those, and I'll give the blockchain, the actual transaction, showing here's the burn that's sent to that burn wallet that everybody has posted on Terra Money. So as chat messages, right? If I get 5 chat messages, okay? So 5 chat messages, 10% of this deal, 50 cents. Nothing, right? Cool. Comments. Let's say I get 8 comments. So I'll do $4 worth of a burn. Nothing, right? Cool. Video views is the interesting one, isn't it? I don't have a lot of followers. That's by design because I don't shill for followers, right? So let's say that with my follower count right now, I get 500 views on channel. That's $50. $50 I'll just burn. $50 worth of Luna Classic I'll just send to the burn wallet. Average watch time. That's the money one. That's the big one. Anybody who's a YouTube influencer cares about the watch time. Average watch time says if your video is an hour long, how much close did we get to an hour as far as how long did people sit on the video and watch? Did they watch all the way to the end? I would argue every last one of them want you to watch to the end, as do I, frankly, and mine are roughly about an hour. If my average watch time gets close to that hour, so 60 minutes, I'll burn $60 worth of Luna Classic. Right now, it hovers around 15 to 20, which is about the norm for people that don't shill it. Great. So I'll do 15, 20. And I'll do that every week. Every week I do the weekly. I'll calculate these numbers. I'll come up with a number, dollar amount, and then that I'll send to the Burn wallet on the following weekly episode on the screen so you can see it with the actual transaction code that you can go link and verify blockchain yourself. Because here's the thing. I'm just a small time player on YouTube. I'm not a YouTube influencer, nor do I try to be. Imagine the ones like Rodney, right? That gets 2,500 views on his stream, on his live stream. He gets 2,500. That wants $250 a burn from him. His watch time, sometimes he'll record for like 2 hours. Let's say he gets 2 hours worth of watch time out of it because he's got a loyal audience, another $120. Rodney makes a lot of money off his YouTube channel. So the test here is who's really about it, right? Who's really about it? Who's really part of the community? Are you just a shill, or are you really part of the community where you're going to put your money where your mouth is and you actually put money up and do towards the burn yourself as somebody who has a platform of some kind? That's the LUN challenge. Who's actually going to be willing to do burns out of their own pocket? I'm not talking random crap. I'm talking with some numbers behind it, without asking for anything in return. Because I'm not asking you to follow. I'm not asking you to subscribe. I'm not asking you to like it. I'm not asking for the bell. I'm not asking for anything other than interaction. You're just here. You interact with it to some degree. Great. And you watch the entire bit of the video. Cool. Who's really bad at it? Chances are one or two things will happen. Others won't do it at all, or they'll think it's stupid. That's cool. I'm still going to do it because I want to do it. I think it's fun. I want to show what community is supposed to be like. Or they'll do a variation. They'll say, well, we'll do a little bit for every follower we get, or we'll do a little bit more for every, like that we get. The ones where they're trying to grow the channel because that makes them more money. Because remember, if they've got ads turned on, they're getting ad revenue. I don't have ads turned on. I never will. So there's no income from my YouTube channel. So understand that me doing it actually is an indictment on those that don't want to do it at all, because I don't make money on the YouTube channel ever will. It's just an extension of the podcast, essentially. My money comes from memberships on the Triad, and this has nothing to do with the Triad. So that's what the LUN challenge is. Who's really about it? Who's really part of the community? Are you really part of the community, or are you just a shill for the token because you want to increase your bag? You want to make more money by telling other people to just buy it and sit on it? Maybe. Who knows? That's going to be the test. Anyhow, that's my episode for this week. Anybody has any questions, feel free to leave them in the chat, and I will check in on the awesomeness that is Twitch here momentarily. Twitch looks good, simple and clean. Cool. If you think of something after the fact, feel free to leave it in the comments below. I will make sure to respond. Keep in mind that the comments are filtered due to the pos chain spammers, as well as recently, there are still a few Seifu diehards that are out there saying nonsense and ignoring facts in front of their face. So I do filter those out for review, and then eventually they'll be posted with a response once I see that. And again, this challenge will start with next weekly's episode. That's October 2nd. Will be the very first where I will do this exercise and have some fun with it. So I'll spin up a wallet and I will start pumping some Luna if I can, because it's hard to do withdrawals for whatever, because of this tax garbage. Got to figure out how to get withdrawals. I think I could do it from KuCoin. Send across to this wallet so that we're ready to go for the very first of doing this. And like I said, if nobody else does it, that's fine. I'm going to keep on doing it because I think it's fun. I think it's fun to show I'm doing my part. It's not about profit for me. It's about community for me. So if anybody else wants that smoke, they'll jump on board and at least show that they care about the token and the community's growth overall. It's not about self-profit. Otherwise, it wouldn't be me raising the bar. It'd be me being the bar once again. And that's all cool too. Anyhow, I will see you guys next week, October 2nd episode, where we're going to get into some more fun stuff, because I have a feeling we're going to see some more fun stuff coming out of especially Ethereum starting in October. I think we're going to start seeing some ramp up. I hope, certainly. And in Luna Classic, we got to see if we get past this minor hurdle that's here and get all these to implement the burn and see where that goes. And then working on the triad and getting my triad members where they belong and their distributions of Luna Classic and other tokens. Until next week,